I first like to just have a conversation about what they know about it, and what their experiences have been with it. Because if it's something very abstract, the conversation may not be very meaningful.
And thank you for joining us as we talk about long-term care. I'm with a specialist today in long-term care. This is Ginny West, and she's based in Glenwood Springs, Colorado. She's been doing this for a long time, and she is certified in long-term care. Going to share a lot of her insight and expertise with us. Thank you for being here, Ginny.
Thank you for having me, Justin.
Yeah, this is great. This is great. And again, I'm Justin Pritchard. I'm a certified financial planner. I'm based in Montrose, but I work with people all over the country. So hopefully you'll learn a lot about long-term care today. Ginny, let's start off by asking, I guess, what is long-term care? What are we talking about in the big picture here?
Okay, the big picture, if I said long-term care insurance, that would basically be an insurance plan that would provide resources for a person if they have a chronic illness, a long-term illness or disease or something like that that's gonna be going on for quite some time. I could also distinguish a long-term care plan, which may not be insurance. It could be some other type of resource to cover the cost of the care needed if a person is needing care for a long time.
Gotcha. So it may or may not involve insurance, but a long-term care, we might call it an event. Is that fair?
An event.
Yeah. And some people define it as like those activities of daily living, like you just can't do certain things, right?
Exactly. So I think in order to qualify for a benefit from a long-term care policy, you actually have to qualify. A doctor has to say that you are unable to perform 2 of 6 parts of what is considered daily living. So that would probably be, includes cooking, eating, dressing, bathing, toileting, continence, and moving from one place to another. If you're unable to perform 2 of those, you are able to use the benefit from a long-term care insurance plan.
Gotcha. Yeah. So that assumes there's a policy, but basically a person is having a hard time eating, going to the bathroom, bathing, that sort of thing. And then a lot of times there's cognitive impairment. Is that right?
Exactly. So that really is the other part. We're kind of talking about the physical parts, but definitely for many of us, it's cognitive related.
Yes. Yeah. Increasingly.
Yes, exactly.
Yeah. Okay, good. Well, thank you. So when somebody needs long-term care, how does that, again, kind of big picture here, how does that impact their personal life or their loved ones? What's going on?
Well, I would say that when the time comes for a person needing long-term care to get help, basically their life changes. They will need to pull in all the resources that they can access. And if it is the children or other family members or friends, those people's lives can be very interrupted in a very big way. They will have to probably quit what they're doing that's important to them, whether that's earning money at a job, taking care of the grandkids, just enjoying the parts of retirement or other part of their living, and can mean affecting their own income as well. So basically, everybody's life begin to change. People may need to move. Sometimes people move in together. Sometimes they move to other places. And so there's big consequences, big things happening when this time comes.
Yes, yes. And then, let's just say somebody has 2 kids, for example. Does each kid typically do exactly 50% of the care or financial contribution?
I would say, in my experience, no. Generally, that falls onto one person or more heavily than the other person.
Yeah,
that's what I would say. So, yeah, I'd say it's not an equal distribution of time, effort, and money.
Yeah.
Families just operate in a way that we honestly don't know until the time actually comes.
Yes, and that's why we're talking about this today, right? What about the financial implications? We've kind of hinted at it, but can you say more about what people might experience if this type of event happens?
Sure. Well, generally speaking, as our lives are set and we have an income coming in from whatever it may be, Social Security, we're taking money from our assets, whatever that may be, the person who is affected may need to redistribute those assets or that income to begin to pay for long-term care. So that really changes their financial picture, changes their financial plan. If for say they don't have that money in cash assets, which most people don't, they will need to probably access their nest egg for long-term care, which is really, not what they would have intended. So that may mean a sale of assets at a time when they really hadn't predicted it. And it's hard to say what else can be going on if the market is down or something else is going on. It can really affect their total financial picture for the long term. It affects their cash liquidity. It affects the actual income that's coming in that is continuing to pay for their lifestyle or their spouse's lifestyle as they know it.
Yeah, big impact on that. And then, so, roughly, how much are we talking about in Colorado these days?
It definitely depends on where you're getting the care. Is it at home or in assisted living or nursing home, which would be the most expensive? But in general, an average for a year is around $60,000 per year for this type of care.
Right, so that's $5,000 a month. And then you and I have talked previously where we both had some, people we knew experiencing this, and the costs can go quite a bit higher, right? Especially with memory care, if Alzheimer's or something is involved, it can go up quite a bit. Exactly.
My parents were in separate rooms, and it was because of the way that the assisted living itself set up their arrangements. They'd been there for a number of years, and we wanted to keep them there. But when they went into memory care, it required 2 separate rooms. So we ended up paying about $10,000 a month because they each required their own situation.
Yeah.
So, yeah, it can definitely rise. And we expect that in the future, the costs are going to go up too. It's rising steadily along with some other costs that are out there, medical care, for instance.
Yes. Yeah. Not getting any cheaper, right?
No.
So if somebody needs long-term care, we kind of talked about a sale of assets possibly or other options. Where does the money come from? What are some of the alternatives that might be out there?
Well, I mean, it's interesting because a lot of people tell me, well, my children are going to take care of me. And, I just ask them, have you talked to them about that? Because are they the ones that are going to actually provide the money? But in some cases, children do provide some or all of the money. It could be cash savings. It could be assets. It could be the sale of a home, which probably is not the best case scenario, especially if there are 2 people if there's a couple and one is remaining at home, or if they both are trying to remain in the home where the care could be provided. It's just not a good situation. So it could be that their income is redirected towards the care. So if it could be a long-term care insurance policy, that would be ideal if we had that, in our plan to be able to have that to back us up.
Yeah. Yeah. Now, a lot of people think, well, when I get old, I'm on Medicare, or if I, experience poverty, I'm on Medicaid. What about those two? What do they pay for all of this?
Sure. So I'll take Medicaid first, which is the program for our indigent or very low income populations. And that program pays for a nursing home, which we all like to look at, especially now, is just one of our last resorts. We're trying to bring care up to the home or other places where people primarily want to receive it. And so Medicaid will pay for a nursing home. Medicaid is actually our federal program, our state program for medical care. And so it will help if there are some resources from Medicare in the event of a short-term illness wherein there is rehabilitative care, or that looks like there's some finite ending to the care. It's about, so for instance, if you had hip surgery and you need to go to a skilled facility to get your rehab, if that ends up being your choice, Medicare will help you with some of those costs for a short period of time. After about 100 days, that's kind of the end of the story. So with long-term care, 100 days is really pretty short. So yes, there's a bit of care, but we really should not rely on either of those programs. I also wanted to mention that a lot of times people will say, I served in World War II or Vietnam or whatever, and so I do have some resources there as far as veterans programs. And a lot of times people do, but in fact, they have to have a significant disability in order to get paid for care in a veterans program. So,
right, so it can be hard to meet those specific criteria to get.
Right, exactly. So my father was actually in the veterans care program in Denver, but he had a hearing disability of about 7% from World War II, but we actually paid about $7,000 a month for him to be in that particular nursing home. So that could be, a friend of mine had her dad there. He had 100% disability. He paid several $100s a month. So depending on the person, there could be some resources there.
Right, and if they don't qualify, they still need help, getting in and out of the bathtub or something. And so, something's got to happen to provide the care they need, right?
Exactly.
Okay, and I wanted to mention, I'd been talking to somebody who had said her mom was on hospice, and she said something like $8,000 a month. And then she said, well, the bill goes to Medicare. So people might be hearing these things, but the key word there is hospice, right?
Exactly. So with hospice, it varies the type of care you receive there. My parents were in memory care and actually had full custodial care, helping them get through the day. And they had a hospice, but hospice was not there every moment of every day. They would come and go as their needs. So Medicare did pay for their hospice, but we still had to keep the custodial going for a 24-hour care.
Yeah, especially memory care, they need supervision.
Right.
So long-term care plan, you've used that term a couple of times. Like what is, what's a simple long-term care plan kind of look like?
Simply speaking, I would say that we're able to provide the very best care for whatever is needed for the affected person in the place where they would most like to be, and that they're safe and sound, and that the people that are their loved ones are not actually having to provide for the care, that children or friends and family are there for them. They're able to maybe manage some of the pieces of it, because there is a lot of management involved, but they're not actually having to provide the care, not having to make the meals or change clothes or do laundry or many of the things that are required in caring for a person. So, just that the person is safe and sound and well cared for, but that the family members are relieved of the actual duties.
Yeah, and people might be hearing this, and we might want to even re-clarify. You've kind of said it, but people might say, well, I'm not a doctor, I'm not providing care. What's the difference between like acute care and then sort of more chronic or longer term stuff?
Sure, sure. So acute care, I would consider that a really kind of a one-time short-term event. It's the knee replacement, and it's got a finite, a beginning and ending, and there's recoverability, and you're gonna come out of it and go back to your normal life. Chronic care, not so much. It looks like whatever is going on with you may remain like it is for a long time, or possibly progressively worsen, its severity in your life.
Yeah, and we've mostly been talking, I guess, about kind of end of life type of things, but it's been a long time since I looked at the statistics. You might know better than me, but what is it, like 2.5, 3 years or something is what a long-term care event typically lasts?
I would say right now they're saying that it's right around 3 years. Okay. Something like 3 years. Sometimes it's just hard to say when the beginning actually is. Mm-hmm. And so it's hard to mark the beginning of the care, but generally speaking, 3 years. Yeah. I think now with Alzheimer's, things can go on much longer, but if Alzheimer's is not involved, it generally is around 3 years.
Okay. Yeah, and we kind of have been heading in this direction, but custodial care that we're really talking about is kind of a different thing from skilled care. So we've got different services that these providers are giving. Kind of, can you break that down for us?
Sure, you bet. So skilled care is really going to be more medically provided. So that will be when the doctor comes and visits and the nurse stops by, or licensed practical nurse, the professionals that are providing medical care. The custodial care is really the defining part of long-term care, and that is just everything that it takes to get us through the day. Just off the couch and to the table for dinner, and then to the bathroom, and getting your shower taken, and getting clean clothes on, and just day-to-day activities for people.
Yeah, I remember I did the continuing education for long-term care long time ago, just to learn it. And one of the interesting things they started it off with was, saying, well, could I, get my wife out of the tub and then over to the table and back and forth, or could she do that for me? And that was kind of an eye-opener that, sure, maybe we could, but one of us is probably going to get hurt doing that, and it's just hard.
It's very hard, and I think that is a very good way to look at it. Just that a lot of times it's women that are giving the care, and women are typically the smaller, physically built person in a couple. So it's very difficult physically to do these things.
Yeah, and I'm glad you mentioned women. Let's talk more about that. There probably is more of an impact on women. There is more of an impact on women. So can you talk more about that?
Sure. I think women naturally are the caregivers of the world. It's our children, it's our grandchildren, and then it seems like it flows into long-term care. We're there first for our mom, for our dad, for our neighbors, and oftentimes we end up ourselves becoming ill. We get tired and fatigued, and injure ourselves trying to pick up a big person, or something along those lines. We also step out of the workplace, oftentimes take unpaid leave. I myself quit a corporate job 10 years ago to be available for my parents. We had in-home care then, and we never knew when the doctor was going to come, or when we were going to have to do this or that. And so working as a self-employed person gave me the ability to give time to my parents when they needed it, but it also set me back a little bit, I think, as far as my own earnings. And so statistically also, women live longer. I'm sorry, guys out there, but we do. We're going to live longer. Not in every case, but then if we're in a couple, then we're ending up the ones that are alone when our time comes, when we need the long-term care. And so I think that it's just really important to have some kind of resource for ourselves, because we'll end up needing it. And honestly, I think insurance companies are repricing some of their products now, and ladies are more expensive than they used to be, because they're looking at the numbers and they're seeing that we're the ones that end up using long-term care. So yeah, I think it's very, very important and just a big deal for ladies.
Absolutely. Right. Yeah, you can't overemphasize that. And just you made a choice that worked fine for you, I guess, doing self-employment. And that's great. And, some people can't do that, or if they did want to re-enter the workforce, if you wanted to re-enter the workforce, it's harder. And just the living longer, she's draining the assets, she's out of the workforce while taking care of him. This is the traditional leave it to Beaver family. By the way, not everybody is that, but yeah, it's hard. Yeah, hard.
Yeah, very hard. Hard decisions have to be made.
Yeah, that's what it is, hard decisions. Okay, so when long-term care planning is done well, why is that such a good thing? What are the benefits that people get of kind of looking at this stuff?
I would say that, as we talked earlier, just that the income will stay the same for the family. The assets remain where they have been planned to be, and they're able to stay there for whatever their intended purpose is. If it's continued living expenses, or if it's legacy, they are there for whatever the person or the persons were hoping for their money. I think that getting a long-term care plan started, oftentimes the insurance company, as part of a policy, will help you find resources within the community. They'll make recommendations about home care and agencies that are very well regarded, and so that is there to help you out. I think also they help you manage the finances. So in often you will need to pay for care and then become reimbursed by the insurance company, and they help you look through things and just make sure that you're getting what you're paying for, and that the pricing seems reasonable. And I think just a little bit of a shoulder to lean on for the family members that are managing it. What are we going to do here? Is this the right way here? Is this the best place? Are we doing things the way we should do it? It's some management as well as financial resources. So I think in my case, I have 5 brothers and sisters, and we would actually all go into the assisted living and meet with the manager of the place. And, it really brought us together as a family.
Yeah.
I think if the plan is not there, the family members can just be torn apart.
Yeah.
So I think it's the resources and the management that are there in a time of crisis, really.
Yeah, those resources are huge. I mean, the family is in survival mode. They don't know what they're trying to do. They're trying to keep the wheels on their life and keep their job and kids taken care of or whatever. And
Right.
they don't know who to call. They might end up calling somebody who's not the best person to call to take care of mom and dad, and that's not ideal. So I'd like to sort of, if you are okay with it, kind of shift towards some questions about insurance itself. But as we mentioned, insurance isn't a requirement. There are some other ways to do it. So I'm wondering, what's self-insuring look like, and what are some pros and cons of that approach?
Sure. I think that self-insurance really, to me, involves setting aside a pretty good sum of money intended solely for that purpose. And hopefully there's time that money can grow and be available for this use. It could be the sale of rental properties. That would be one thing. It could be that children, are very financially well set and want to help provide for that. So I think that there are people who do have a lot of money who may be able to self-insure and feel good about that. I always think that if you can, it's good to use somebody else's money, even if you are considered wealthy or you consider yourself wealthy. It's good to use somebody else's money, but I think that each person has to make their own decision about self-insurance.
Yeah, and people may be curious about what it looks like to use somebody else's money. So what's, kind of the basic nuts and bolts of a long-term care policy? You qualify, they send the money. I mean, that's the
Yeah,
gist.
I mean, I think, we have what I would call a traditional long-term care insurance plan. For a couple now who are 55 years old, they may pay $5,000 a year. That plan at the end of their lives would pay somewhere around $500,000 to $1 million worth of benefit. So the leverage on the money is pretty good. So like I said, before, that really involves a lot of times a little bit of a waiting period. So generally insurance policies have a waiting period. So just to help them with their pricing, their premiums. And so it could be that, you have a 90 or, greater amount of waiting time that you're going to do self-insurance for that amount. And then the policy may kick in and you may end up paying the caregivers, but then on a monthly basis, you're reimbursed. So that's kind of the nuts and bolts of it. So that is one kind of the standard long-term care insurance plan, how it works.
Yeah, and there are, and we probably don't want to get too far in the weeds, but there are other kind of approaches to it with bigger lump sums, let's say, that you can talk to people about if they, want to start looking at these different avenues. Is that right?
Exactly. So I think the standard traditional long-term care insurance policies have had some just bad press because they do not have a fixed premium, and that the premiums may rise during your lifetime, which is a hard thing to face. And so that is a drawback of the traditional plans. Right now, I think the insurance industry, for one thing, they are trying to upgrade and just modernize, come up with new ideas for long-term care. And so those consist of life insurance policies which have riders where the actual death benefit from the policy can be what we call a living benefit. So you can actually accelerate the death benefit. Instead of using it at death, you use it in your life. And so there are a variety of those. Oftentimes we take a look at an old life insurance policy that may have been a couple or a person may have had for years, and now modernize it. If that person is still healthy, we can kind of bring it up to speed and hopefully give it a long-term care condition, a piece of it, so that they could use it for that if they wanted.
Yeah, good. When is a good age for people to start looking at this?
It's interesting. I kind of read some numbers on the internet to try and find out what the best age is. And honestly, I think that probably in your 50s is really a good time. In our 50s, we're beginning to see that we're not going to live forever, and yet we're still healthy, that we may be able to physically or cognitively qualify for these. I think a lot of times when people are 60 or older, they may already have conditions which don't allow them to get it. I actually have some hiking friends who are 73 and they just got their policies, and I'm so amazed at them that they got them. But interestingly, some of the newer types of plans actually perform really well if they're purchased before the age of 50. So these may be life insurance policies for younger families, but have an aspect of long-term care, and they really work well in the long term. So even people in their 40s, it's not unheard of, and actually makes a lot of sense. So whenever you can, as soon as you can get to it.
Yeah, and the event can happen to anybody. We've been talking about end of life, but an auto accident, an illness, I mean, a lot of things can lead to a long-term care event. So,
exactly.
if people want to start exploring this, what's a good first step for them? What, somebody says, I had to look into that. What should they do?
I think the way that I work with my clients is I first like to just have a conversation about what they know about it, and what their experiences have been with it. Because if it's something very abstract, the conversation may not be very meaningful. But if it's something that for some reason in their lives is real, it can be meaningful. We can, do a little bit of education on the things that are out there, the different ways to take care of this. I also like to get right away into health, because this really is a health qualifying coverage. So we need to talk about what's going on pretty specifically with your health. Otherwise, it could be that it's kind of the end of the conversation, or that you would work with Justin on your assets and reallocate those for your long-term care plan. There are also special products out there now for people who cannot qualify for traditional long-term care. So there are other things out there. So it's kind of a lot to explore, but it's really makes a lot of sense to take a little bit of a dive into it.
Yeah, so start talking to somebody about what you have going on, what you have in mind, what health issues exist that you're aware of at least, and then you can figure out what might make sense.
Exactly.
Good, so we've got your information up here on the screen, Ginny, for people who might want to contact you. I should ask you if there's anything that we've neglected to talk about yet, or any last thoughts that you might have.
No, I'm just gonna look at my notes. I wanna say that November is always traditionally long-term care awareness month. So the industry itself takes the month of November and just asks people to kind of stop for a minute and take a look at long-term care, see if they've done the right planning for themselves and their family, and maybe just visit what's involved. I think with COVID-19, our world's a little bit upside down in that people who have had COVID may have lasting effects. We now have millions of people who have had this disease as a pre-existing condition. It's probably going to come up on the questionnaires going forward. So our world is a little bit upended as far as this pandemic. So, but no, I'm happy to talk to anybody if they would like to discuss. And I sure thank Justin for bringing this up to his clients and anybody else who's interested. I think it's really a smart thing to do, and I thank you.
Yeah, good. Well, thank you, Ginny. This has been really good. I appreciate your expertise and your sharing, and you have a great day.
Okay, you too. Thanks, Justin.
Thanks.
Bye-bye.